Hey everyone, welcome to The Loft. Hope you're doing well and having a good start to the week. So today we're going to be looking at some stories that have interested me and may potentially interest you as well. And also we'll be doing my normal weekly portfolio update, just see what I've bought, sold, what's happened over the entire week and how the performance generally has been. I also wanted just quickly to touch on the giveaway that I mentioned in a couple videos ago. And essentially I am looking to do it. I am going to be doing it. I'm just trying to work out the best method of allowing you guys to join in and getting the best outcome for you guys. This will either be probably through YouTube comments or Instagram hashtags. If you don't follow me on Instagram, feel free to pop over. I'm not massively active, I'm looking to get better on that, but feel free to pop over there just so you're ready if we do it via Instagram. And I'm debating what to give out. If you've got any suggestions on what you guys would prefer and it's realistic, do let me know down below. But I'm thinking of printing a special one-off t-shirt with a single design that no one else would have, so that you have this one t-shirt that is bespoke to you. And that's what I'm thinking generally, but if you have any other ideas, do let me know. I've got some collectibles that I could potentially part with a few tiers, and I'm happy to send them over if you think that would be a better giveaway. Obviously, I want it to be something valuable to you and something that you might be interested in, so do let me know down in the comments, and let's get on with the news. So the first story that I wanted to touch on is around 3M, and it's kind of a couple of things all smashed together, to be honest. So the first one was on the 12th. I saw that Morgan & Stanley have actually increased their target price for the company from $188 per share up to $200 per share. And that a recent poll undertaken by Capital IQ shows that the average across multiple different analysts believe that the share price target is between $158 per share and $233 per share, which is good. But then I came across another article on the 16th, which was again from Capital IQ saying that they'd run another poll, which now shows that the average for 3M's price target is now from $174 to $233 per share. And because that came out on the 16th and the first article came out on the 12th, I'm going to give more weighting to that. And I feel that this, to a degree, may imply that more people have more confidence in 3M than they previously expected from the first poll. And that is slightly good because the baseline on the estimates has gone up by around $30 per share. 3M currently are trading at around the $200 per share mark, so somewhere in the ballpark of that figure. And they do have a first quarter earnings conference call on Tuesday, the 27th of April. Due to this, I did want to go and have a quick check around the interwebs just to see if there was anything that had come out recently that may potentially have caused this particular change or something like that. Generally, it's not really the case that I find particular news affects these articles and these analyst reports. It's more of a case of they've looked into the company mechanics a bit deeper. But it is always good just to see if there's anything coming around the corner that could potentially affect the company, and if we should plan to get in sooner or after that particular thing if something is happening. And in this case, I didn't really find anything. Well, I did. The one thing that I did find was a report around their return on capital employed, which basically stacked up their return on capital employed for 3M against the rest of the industry. And what it showed is that 3M's return on capital employed was essentially a value of around 18%, which is relatively high and quite good. But it looks even better when we compare it to their industry, which is sitting at around 7%, just under. So on a comparison basis, they're doing quite well from that front. I am looking at doing potentially a video on return on capital employed, but if you wanted me to go over that slightly sooner rather than just leaving it for a few weeks' time, please let me know down in the comments and I'll prioritize that ahead on the list of videos that I'm planning to do. And that was essentially the story for 3M. So now we're going to quickly move over to another story. This time it's two stocks relatively similar smashed together. We're talking about Altria and Philip Morris. Starting off this one, I saw a snippet around Christopher Grau, who is pushing a buy rating. He is an analyst at Stifel. He's pushing a buy rating for Philip Morris and Altria with a target price of Philip Morris of $100 per share and a target price of Altria for $56 per share. And he has also said that there are potentially good things to come from their earnings reports, so it's worth keeping an eye out for them. Altria have essentially a live audio webcast around their earnings on the 29th of this month, so we could always check in and see what's going on there. Though I've done a little bit of looking and there could be some potential issues coming down the pipeline for Altria in the form of a lawsuit coming to them, unfortunately. Again, we do always love a lawsuit here, so let's look at it. It is alleged that Juul, which is the vaping company that Altria have a 35-ish% stake in, are producing false and misleading statements in their marketing and advertising, and there are claims that they are attempting to get teenagers vaping and potentially smoking as well, which isn't particularly a good thing, and it's alleged that the brands Altria and Juul are using their vaping materials to achieve this and get more teenagers vaping and smoking. So that's not particularly good news, and that it will potentially be going for a lawsuit if it goes through. There is a suspicion, and personally I feel a quite high likelihood, that the companies are going to choose to settle out of court if this does go ahead. And the main reason for that is that there is potentially a chance that this could be a violation of the RICO Act, and a judge has already looked over and agreed that the main beneficiaries from this campaign, these allegations, shall we say, are mainly benefiting Altria themselves and also the directors and co-shareholders and things like that of the Juul brand. So there is a potential racketeering and profiteering thing going on here, which would violate the RICO Act. So it's quite good to know and quite a good thing to keep an eye on. I don't know if this is going to affect the share price or if it has already been built in, but it is always good to keep an eye on these sorts of things. If we look at the share price for both Philip Morris and also Altria, we can see that they move relatively in tandem along the same sort of patterns, with Philip Morris being at around $90 per share and Altria sitting at around $52 per share. Moving over to the final story, this one is a slight 180 from where we just were. We're going from stocks that kill to stocks that help you heal. And this one is a quick story around GSK. If you're interested in GSK, a little bit more of information about them, I did a video recently and I've added a link down in the description, so feel free to check that out. But for the story today, it seems that GSK are now using one of their production facilities located in Barnard Castle area to produce up to 60 million doses of the Novavax COVID-19 vaccine, which is a good news for the UK. Sorry for anyone outside of the UK, but we are pushing in the UK very hard to get the vaccines out, and we've had a few issues with the EU around this, and obviously this will help to counteract that because they will be made within the UK. I'm uncertain if GSK are due to make any form of profit off of this. I haven't read anything that they are. They might just be reimbursed for any costs of the making of the vaccine itself, but it is always good to know that they are hopefully making some more vaccines. This is happening while GSK are awaiting some potential reviews from the EMA and the FDA on their medication developed with Vir Biotechnology, which is a medication designed to treat the early stages of COVID-19 and to, from my understanding, prevent cases getting worse. So once you've got COVID, it will help you not develop worse and worse symptoms and require hospitalisation. This in itself may help GSK in the form of revenues, mainly because there are rumours that COVID is going to become one of those things that, a bit like the flu, is here every year. It doesn't go away, it just pops back up and says hi every single year. So if that is the case, we are going to potentially have regular times where people are going to be hospitalised with this illness, unfortunately, and I imagine GSK will be able to capitalise if they have a product that can help that and that they can start getting prescribed out to multiple people. We do need to see if the FDA and the EMA approve it. They are essentially the medical associations and the drug associations for America and Europe. So it'd be interesting to see what we get from that. And it is always good to know that there is medication that may reduce the number of deaths from COVID, whether it's now or in the future at any point. GSK have also had a recent share price spike. This is caused by the announcement that Elliot Management have bought a position in the company, and I assume this makes people believe that there is some sort of confidence in the company and then they're jumping on it. However, this can be a kind of hit and miss thing depending on your point of view. Elliot Management tend to get into positions in companies and they're very disruptive. What they will do is basically send a letter to the CEO, board of directors, whoever it is, and then say, these are the changes I want you to make, otherwise I'm going to sell all my shares. The company then either says, I don't care, do what you want, or they make the changes. They then, essentially, if the company make the changes, they keep the shares and they see the benefit from the share price inflation until they eventually do sell out in the future anyway, or they drop all of their shares and potentially can drop the share price down a little bit. So, bit hit and miss. It would be interesting to see what happens, and it's worth keeping an eye out to see if a open letter to the company goes out over the next week or so, And if it does, don't worry, I will make sure to keep you updated on that front. If you're interested in any of the stories today, I have added the links down below, so feel free to go and check them out. But if you could hit the like button on your way down, I'd be very grateful. And now let's move over to my portfolio and see what's changed over the last week. As always, with these weekly updates, I will be starting with the overall change in portfolio value and portfolio return. So looking over, we can see that my portfolio value has increased from £2,727 up to a new total of £2,761, which in form of increase percentage is about 1.2% in value increase. And in regards to return increase, we have moved from 13.33% up to a 13.73%, so overall less than 1% in return movement. If we compare that to the VOO Vanguard ETF, for example, we can see that over the last week, the ETF has moved by over 1%, which beats my portfolio's return outright because I've moved less than 1%. So lost out on this week, but I'm still happy with my portfolio. If we jump over to purchases, however, I had a relatively light week, unfortunately, with funds, and next week is probably going to be the same. So I'm not going to be able to do as much buying as I would like to do. But despite that, I did manage to pick up one full share of AT&T for a total of £21.62, which brings my total AT&T position to 2 full shares with an average buy-in of £22.44, which ideally is going to increase my yearly dividend outcome and the amount that I get paid per year by around £1 to £1.50. So not amazing, but it is more money that I didn't have before, and I am relatively bullish on AT&T, and I think there's a lot of upside from their current share price of where they are, especially with them doubling down on things like HBO Max. So that's where we moved with that. Now let's jump over to the dividends. And in regards to dividends, I managed to pull in a whole £2.86 across 3 payments. The first payment that came in was from DTE with a payment of £1.56 for the 3 shares that I held on the ex-dividend date. I am slightly concerned about this one though, because the payment came across as a return on capital payment rather than a general ordinary dividend. And normally that means that the company is potentially struggling to cover its dividend with revenue or their earnings and are looking to fund the dividend in other ways. So it does warrant some looking into. Then we had a payment from a company we mentioned earlier, GSK. They paid out £1.15 for the 5 shares that I hold. And I've managed to increase this position to 9 shares now prior to the Elliot event that has caused the spike and made it above what I was previously buying in, so I'm a bit hesitant to buy any more of that company. Then we have the final company that paid us, which is also a company that we mentioned earlier. This one was from a Philip Morris. They sent across a whole 15 pennies for the 0.02 of a share that I currently hold. So not a big position, not a big payout. Understandable. I am going to look through DTE, however, look at the finances and double check, because this return on capital payment has got me slightly concerned and I need to double check the finances just to make sure. Currently, I've got about £40 in the company and I am up overall, so I don't have any real concerns if I do sell out, and I could use that money to potentially buy 2 more shares of AT&T or something different entirely. So that's my portfolio update for the week. Do let me know down in the comments below what you think. Is there anything I've missed, anything I should have done, any mistakes I've made? Happy to always chat about it. You guys are awesome and I love to hear from every single one of you. If you haven't already, please remember to like, subscribe and potentially share this video. It really helps the channel out and I would greatly appreciate it. I will get in touch shortly around the giveaway as soon as I've got some things confirmed and potentially some more ideas on what people would like. If you're interested in the development of my portfolio over time, I'd suggest checking out this playlist here, which is the week-to-week update for my portfolio so that you can see what's changing. And until next time, remember to invest, save and subscribe.